So there are a lot of patterns that you can use, but these two patterns are very, very important. They're very powerful, and if you can master just these two patterns, it's going to go a very long way in earning you consistent profits. So we're going to analyze some charts together, and we're going to find some engulfing and pin bar patterns soon. But first, if you want to learn about all other candlestick patterns that are out there, you can come over to the Candlestick Pattern Dictionary and just search for it on Google, and you'll come here. This is the exact address, and this website basically gives you an outline of all the different kinds of patterns that are there. I'm not saying that you should be trading all of these. I personally believe that being better at just one or two is the key to success, because there is so much information out there. I don't want you to go through everything and try to confuse yourself. But if you still want to learn just for the sake of learning, that's perfectly fine. You can also move over to the investing.com website, and here under the markets, go into stocks, and then you can just open up any one of these stocks right here. Let's just close this. Let's go with Apple here. When you do this, it's going to open up the Apple's stock chart, and you can see that this is just a straight for aligned chart. What you can do is you can click on the candlestick icon here, which is going to show you all the candlesticks, and then it gives you the the day's range, the previous open. It gives you a number of other details like the EPS, but this is not really involved with technicals. So what I want to do is I want to come up here into the technical section. Just click on that, and now we have I need to get rid of this. Okay, so now we can go into candlestick patterns, and there we have it. You see, what you can see is that on this chart they have labeled each one of these candles wherever a pattern is appearing, and a pop-up shows us what kind of pattern it is, how reliable it is, and when it was formed. You can also go in and look at some of the patterns that have been made in the recent past. It will also give you the hourly, the time frame that this pattern is appearing on, and the exact time, and how reliable it is. So this particular pattern, the evening star, appeared on the H1 chart. This one appeared on the weekly chart. This is on the daily chart, and then we have this engulfing bearish pattern on the monthly chart, and this happened in the month of May. So you can open up different kinds of charts. You can maximize this. You can change the chart levels as well, right? The time frames, and then see how it actually works. You can explore this. It's actually a wonderful tool, because the more practice you get at this and the more exposure you get to the particular patterns that you're trying to master, okay, it's just gonna help you. So moving ahead, here I'm putting on a chart on the screen. What I want you to do is I want you to find engulfing candlesticks. I want you to pause this video, go through the entire thing, and when you think that you found all of the candlesticks that are engulfing patterns, come back and start playing this video again, and we will go through some of them together. Okay, so let's proceed. The first one that we see here on the left side seems to be a bullish engulfing pattern here, but if you zoom in, we're going to see that the red candle, the body of this candle, remember we're going to ignore all the wicks, right? So we're only looking at the bodies. So the closing price of this is lower than the opening price of the next candle. So this candle here is not completely engulfing the body of the previous candle. So this may seem like a engulfing pattern, and the end result is that yes, prices did go up, but it doesn't fall under the engulfing pattern criteria. So this one here, this is an engulfing pattern. if you see that the body is completely engulfing the previous one, and then price did go down for the next three candlesticks, but then it moved upwards. The next one is this here. This is engulfing the previous one, and then the next candle and the next few candles we see is they've remained above the closing price of this candle here. So whenever you see a bullish engulfing pattern, what we're expecting is that the next few candles should go higher than that previous one. So that gives you some room to make some good profits and then exit the market very quickly. So moving forward, this again here is another bullish engulfing pattern. Immediately after price closes here, what we see is that sellers and buyers get into a struggle. The buyers try to push it slightly upwards, but then the sellers gain control and then move downwards. So this is sort of like a spinning top, right? But then prices start to move downwards. So if you did get in, you would be getting out somewhere around about here. Let's go forward. Let's see this one. So here again, we have a bullish engulfing, and then price moves forward. Again, another bullish engulfing, price moves upwards. This here, this candle is a bearish engulfing. Now the reason why I have this in red is because this is one of those candles where price actually didn't go further down. As a matter of fact, it just went in the opposite direction. So this is basically a fake signal that we received. So even though bullish engulfing and pin bars, etc., all of these patterns, they give us some pretty reliable information, but it's not always accurate. It's not always going to happen in that way. So I want to explain this. When these patterns are formed, even if we are very experienced in trading them, we have to look at certain other factors as well, such as indicators, etc. We have to make up a strategy, and this is something that I'm going to explain to you in the next courses. So you don't need to worry about it, but just really need to remember that there is more to it, and you need to learn more before you actually put up your money and start trading in this way. So we have another bullish engulfing pattern, and then price goes way upwards. Here it's a bearish engulfing pattern, price moves downwards. There we have another bullish engulfing and price moves way upwards. Bearish, and then bullish, and then another bearish. Now even though price didn't really close way down there, just as we saw, it went up and closed really high, similarly just kept going downwards. What happens here is that the very next candle, buyers try to push price upwards, but then sellers manage to push it downwards. So if you were to get in or into this market here, you would probably be getting out somewhere over here, and this is part of a strategy which I'm going to be explaining later on. Again, we have a bullish engulfing, price moves way downwards, but then buyers come into control and they push price upwards. Bullish, and then that is also bullish, but then again it's marked in red because over the next few candles, basically what we're looking for is that immediately after the bullish or the bearish engulfing, we want the price over the next few candles, it needs to go in that direction. So this is not happening here. We have a bullish engulfing, but then price just relatively stays below the closing of this candle here. So that's why I marked it in red. We have a bullish engulfing, price does go upwards, again bullish, it goes upwards. It gives us some time to make some profit and get out, and then we have this huge bearish move following the bearish engulfing pattern. Moving ahead, here is another chart. Actually it's the same chart. I just want you to find pin bars instead of engulfing patterns here. So pause the video, go through this, and then come back when you're done. And now let's proceed. So this here looks like a pin bar. It has a body that seems to be the body, the wick is basically more than 2 times the size of the body. That's one of the rules. But it doesn't really qualify because it has this lower, this pretty large, lower wick. So ideally, if the wick is very, very small, almost negligible, we could, classify that as pin bar. It looks more like a hammer because it has that lower wick. But then, if you note that the body itself is also pretty large, right? So it doesn't really look like an inverted hammer. This doesn't fall into the category. We're gonna go through some more, and you'll see what I mean. So this here it looks like a hammer as well. It's also a pin bar. The upper wick is like much smaller than this one, right? So we would expect that prices are going to move upwards. It also falls under the same, it has that rule is perfectly fine here, that the body, the wick is at least more than 2 times the size of the body. So, and we see prices go upwards. This is also a pin bar here. And then price moves downwards. Here is also another pin bar, which would suggest that price is going to move upwards. And then this one here. So prices have been generally stable in around about this area. And then we have this huge upward movement, and then here buyers, step in. They keep, driving the price upwards, and then for some reason the sellers come in and they push the price downwards, which results in this formation. Again, the lower wick is it is pretty long. It shouldn't be that long. This needs to be all the way at the end, but it still does qualify because the body is really, really small as compared to this one, right? So the body was pretty big. And then prices start move downwards. So we're not only going to be looking at this once again. What I can see just by looking at this chart is that there is a very pretty strong level of resistance right about here. So which is why we see the price moves downwards. It moves downwards again over here. So it's sort of like a line that's going right about here. But since we haven't done support and resistance so far, that is something that we need to do in the next lecture, right? So in the next lecture, support and resistance, the levels, entry prices, etc. is going to be a lot of fun. Join me, and we are going to do some live examples on real charts as well after we've done the theory.